The U.S. Securities and Exchange Commission has approved Nasdaq to list and trade Bitcoin index options, opening a new regulated derivatives channel for institutional and retail participants. This marks a significant shift in how market participants can access Bitcoin exposure. Unlike spot Bitcoin holdings or Bitcoin ETFs, Bitcoin index options give traders the right, but not the obligation, to buy or sell based on the value of a Bitcoin price index at a future date. This distinction matters. Spot exposure means holding Bitcoin directly or through a fund. Options-based instruments let market participants hedge existing positions, speculate on price direction with defined risk, or structure more complex strategies without holding the underlying asset. Why regulated Bitcoin options access changes the playing field. Options markets are foundational infrastructure in traditional finance. They provide price discovery signals, enable hedging, and attract a class of institutional capital that requires regulated venues with standardized contracts and clearing guarantees. A Nasdaq-listed Bitcoin index option brings that infrastructure to crypto in. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A way that offshore or unregulated platforms cannot match. Institutional desks at banks, hedge funds, and asset managers often face compliance requirements that restrict trading to recognized U.S. exchanges, making a Nasdaq listing particularly significant. The approval also fits a broader pattern of crypto derivatives gaining regulatory acceptance. The SEC has previously reviewed exchange proposals for Bitcoin-linked products, including filings related to options on Bitcoin ETFs through exchanges like Nasdaq PHLX, as reflected in earlier SRO. This development is not just about new product availability, it's about expanding the depth and legitimacy of the Bitcoin market. With Bitcoin index options now available on a regulated exchange, a new class of traders can engage with Bitcoin derivatives using tools they already understand from traditional markets. This could lead to increased liquidity, more sophisticated trading strategies, and broader institutional participation. The approval also raises questions about how this will affect Bitcoin's price volatility and market structure. While options contracts can provide downside protection, they can also introduce new sources of speculative pressure. The SEC's decision signals a cautious but deliberate expansion of the crypto derivatives ecosystem. It is not the first step in Bitcoin's institutional adoption, but it is a pivotal one. The next signal to watch will be how quickly and at what volume these options contracts are traded. High initial volume could indicate strong institutional interest, while lower than expected activity might suggest lingering skepticism or regulatory uncertainty. Additionally, the response from other exchanges and regulators will be important. If most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Nasdaq's Bitcoin index options attract a significant portion of the market. It could set a precedent for other regulated platforms to follow suit. For now, the focus remains on the SEC's approval and what it means for the evolving structure of the Bitcoin market. The mechanism is clear. A regulated venue is now available for Bitcoin index options, and the market will respond accordingly. Whether this leads to a more stable, mature Bitcoin ecosystem, or simply another speculative cycle remains to be seen.